Hi, everybody, and welcome back. David Robertson from the Financial Center once again to just share some thoughts with you. Well, here we are with our mid-year outlook. Those of you that are paid attention to the videos and watch religiously, which I hope is most of you, know that this is our way of talking to you without actually talking to you. And for those of you that have paid attention and watched some of the previous videos, you recall back in February when I did a video that simply said, markets, we've had two great years back to back, and markets were way up for January and February, and we were far overdue for a correction. I do not have a crystal ball, folks. It cannot foretell the future, but that little video, we had a correction after that. And I pointed out to each and every one of you that corrections are okay. They're normal. They're supposed to happen. They're healthy for markets. And in that case, we were overdue for some kind of correction. Now, I didn't know when and the time or the day, but that happened. We had a pullback almost 20% from the peak to the trough. Variety of reasons, but most of which was the tariffs and what effect that they were going to have on the economy. Well, so far here as we speak, markets are about flat for the year, or the S&P up just a little bit as we speak halfway through. It took 10 days for the markets to go down about 20%, and it took about 6 weeks for us to gain that back. So, as we've said in the past, markets tend to go down in the elevator, but come up in the escalator. So, good thought for you to think of. So, where are we today? So here we are today, middle of June, and what effects have the tariffs had? Really, not much. We have yet to find any effect that the tariffs have had on the economy. Many folks thought that these tariffs were going to be inflationary and drive up inflation and be bad, bad, bad. As yet, we have not seen any evidence that that is happening. Could it still happen for the rest of the year? Of course. The future is unknowable. Some of the other things that have happened, we had this pullback and now back up. Corporate earnings have actually been surprisingly good, which, once again, you recall that I've talked about in the past that corporate earnings are the mother's milk of the market. Markets tend to react on emotion and fear, but corporate earnings are what makes the economy and the markets go long term. And corporate earnings have been surprisingly good so far. We'll see what happens. The Fed. Everybody knows that the Fed has been trying to reduce interest rates throughout this year, and the discussion was last year. But they couldn't because the economy was doing so well, which isn't really a bad thing, folks. Well, the Fed would still like to reduce interest rates, but they're kind of on hold to see how this thing is going to shake out. Now, to the positive, once again, things that are positive is the labor market has held up really well. We still have plenty of jobs for people, and despite the Doge and people being laid off from the government, we haven't seen any effects of increased unemployment. So we'll keep an eye on that. But that also is a positive thing for the economy and a tailwind for the second half of the year. Now, moving on to where we are today, as I said, markets today are about flat, the U.S. market for the year. International markets have actually done very well and lead the world outside of the U.S. So, a great case for diversification. back to where we are today and what for the rest of this year, our outlook. Well, we still have the big, beautiful bill that we're waiting to see what happens. And again, as you've heard me talk about in the past, markets can live with good, bad, high taxes, low taxes, but they can't live with uncertainty. What we have today is still uncertainty regarding what's happening with the tax package, which is set to expire on January 1st of 2026. So that will get resolved at some point this year. And when it does, however it gets resolved, that should be a tailwind for markets in the economy. That also should give the Fed some guidance as to what may happen with interest rates. Right now, markets are expecting 2 rate cuts, probably going to happen towards the end of the year if they happen. As I said, the Fed would like to reduce rates because the debt is enormous and they would like to pay less interest on that debt. So in the fall, maybe we get our 2 cuts. That also will become a tailwind for markets in the economy. Something else that we have today is we still have geopolitical issues. Most recently, Israel and Iran. And how does that shake out? And the Ukraine is yet to be settled or move forward with that to get that to settle down. But folks, here's what generally happens when we have those geopolitical things or wars is this happens. Is immediately people sell first, market goes down, and ask questions later. But as things begin to get repaired, markets gradually work their way back up because, again, corporate earnings are what matter on that. So, looking forward towards the end of the year, some resolution too. Maybe some of these geopolitical events get resolved. That could be a tailwind. Reduced interest rates by the Fed could be a tailwind for markets. And passage of the tax package will become some kind of a tailwind for the markets. Possible headwinds or problems, volatility. There's going to be, in our opinion, continued volatility because we live today in a country that's politically divided and anything can happen. But as I said before, when things happen, markets tend to go down in the elevator and climb back up in the escalator. As we've seen today, corporate earnings are still good. Hopefully that continues. Hey, hopefully you found this little outlook or a summary helpful. If you have questions, please give Tim or myself a call. We're still here on duty, although we're going to try and take a little bit more time off in the summertime to do the things that we coach all of you to do. And of course, if there's somebody else that you know that needs to hear this kind of information, please feel free to pass this on or to give us a call and see if we can help them as well. So until next time, enjoy the summer, get out, have fun, and we'll talk to you soon. Bye for now.